Business News now, Stephen Carroll joins me. We're going to start, Stephen, with a strike today at Air France.
Half of the airline's long-haul services from Paris have been cancelled, along with some medium and short-haul flights. This as pilots, cabin crew and ground staff walk off the job in a dispute over pay. The airline says around a quarter of its workforce is taking part in the strike action. The workers are looking for a pay rise of 6%, which management says is unreasonable. Striking staff are to stage a demonstration at Air France's headquarters at Paris's Charles de Gaulle Airport later this morning.
Let's move on then to carmaker Ford. It's ousted its top executive in North America.
Raj Nair has been fired from his job after what Ford says was behaviour inconsistent with the company's code of conduct. Now, the company hasn't specified exactly what led to Mr Nair's dismissal. It had begun an investigation into him after an anonymous complaint. His departure comes at a time when Ford has warned that profits will slip in this year because of a slowdown in the US market. Georgina Robertson has the story.
And of course,
Raj Nair rose to president of Ford North America after 30 years at the company. He's been forced out with immediate effect for unspecified misconduct.
We made this decision after a thorough review and careful consideration. Ford is deeply committed to providing and nurturing a safe and respectful culture, and we expect our leaders to fully uphold these values.
Ford has not given details of the nature of the misconduct, but an investigation was triggered by an anonymous complaint. Raj Nair has released a statement expressing his regret that he hasn't exhibited leadership behaviours consistent with the principles that both Ford and he believe in. The work culture at Ford has come under scrutiny in the past year, with the CEO forced to apologise to workers at 2 Chicago factories following a harassment investigation. This comes at a time when Ford's US business is under pressure. The carmaker posted a 7% drop in US sales over the past 12 months and is forecasting weaker profit in the coming year.
Turning next to Australia and some strong results from the airline Qantas. The carrier known as the Flying Kangaroo reported record profits for the 6 months to the end of December, up 15% year on year. It's an impressive turnaround for the airline, which 3 years ago was marred in record losses. The biggest growth is in the company's domestic business, with CEO Alan Joyce acknowledging that it was facing tough competition on international routes.
Not such good news, Stephen, though, for the British bank Barclays.
It's a mixed set of results. The bank reported net losses of £1.9 billion, or over €2.1 billion, but that was down to one-off charges. Pre-tax earnings at Barclays actually rose by 10%. The lender writing off more than €1 billion relating to charges connected to the changes in US corporate tax.
Now, in the United States, the minutes from the latest Federal Reserve meeting confirm a picture of an improving American economy.
The Fed is preparing for stronger than expected growth this year, a trend which might lead to faster interest rate rises. Now, these minutes are always very closely examined for hints of what the Fed might do next. Fears of faster rate rises had caused a stock market sell-off at the end of January. Many analysts expecting an interest rate rise from the Fed at its next meeting in March.
So how's all that playing out then on the markets? European
shares opening in the red. That's following on a trend we saw on Wall Street after those Fed minutes were released. London and Paris both opening down around 2/3%. Barclays shares, though, up over 4% after their latest results. The Asian markets largely taking their cue from Wall Street. The Nikkei in Japan finishing down over 1% at the end of trading there. The exception was the Shanghai Composite, back in business today after the Chinese New Year holidays and up 2%. Some pent-up demand working its way out there.
Okay. Finally from you, Stephen, there's a digital revolution going on that's a bit of a Chinese tradition.
That's right. It's called the Hongbao, and it's the traditional red envelopes stuffed with cash that are exchanged over the Chinese New Year holidays. It's a tradition that's moving at the times, though. 4 years ago, Chinese tech giant Tencent introduced the digital Hongbao on its WeChat application. This has seen explosive growth this year. Almost 800 million people sent or received money from friends or family on mobile applications. Other companies, including Alibaba, getting in on the act as well. The people usually get several Hongbao. Tencent says that one man actually sent over 2,700 this year, and somebody else received over 3,000. So lucky them.
Lucky them, and I know people complaining about the price of a stamp to send a Christmas card. There you go, Stephen Carroll. Thanks a lot for that business update.